Hello everybody and welcome. This is Chande. Welcome to another episode of technical analysis of the S&P 500 index for the week ending June 7th, 2024. The market made three new highs this week and survived a unexpected unemployment report on Friday. So let's dive in and see what happened. A gentle reminder, past performance is not necessarily indicative of future results and the risk of loss in trading. So this was the strong reversal on last Friday. The market followed through and rose above this bearish reversal day. So we had three new highs for the week. And then this was Friday, where we had unemployment report stronger than expected with 272,000 new jobs and yet a higher unemployment rate. So a little confusing. So the market made a new high and a slight new low, but was essentially flat to down slightly. So overall, a strong week in the market. Last week I posted this video discussing whether these big bearish outside reversals are truly bearish. Well, not always, and this week's market action only confirmed that with three new highs. This is the 5-minute chart for the entire week for the S&P 500 with the FAMA or fully automatic moving average bands plotted here. There's the ATR bands with plus or minus 1 unit of variation. This was last Friday's rally. Then we had a sell-off on Monday, a little bit of a rebound, strong rally heading into Wednesday. Thursday we played defense, getting ready. Slight sell-off this morning after the hotter than expected report. A bit of a rally, but then a sell-off again midday. Stayed above the intraday lows, and of course we're higher for the week. This is daily data for the S&P 500 index with the chance indicator, the Chande absolute trend strength indicator. This is a heavily smooth measure of trend strength. Any reading above 75 means we have a long-term uptrend. The current value is 96.45, so clearly we have a strong uptrend, and the bars are painted green. So the uptrend that started in the middle of May is continuing higher. This is the daily data for the S&P 500 index with the momentum persistence indicator in the lower panel, sort of a green flag, red flag setup. We're still barely in the green, so this decline over here has reduced the value for the indicator, but we are a hair above 75, so you'd have to say this indicator is not really showing long-term strength. This is a very important chart with daily data for the S&P in the upper panel and my proprietary indicator down below. During very strong uptrend, it's at plus 300. During very strong downtrend, it's at minus 300. And in this little consolidation here, you see it's come off the highs. And even though the market made a new high, this indicator has not. So momentum is lacking in this little breakout. So this looks like a weak breakout at the moment. So I'd like this thing to reach 300 in order to confirm a strong uptrend. This is the counter trend TC blast indicator or buy low with adaptive stop. We have weakness, we have strength, so we kind of bought in this area. This was a trailing stop, we got stopped out. Now again, we have activity above the trigger line, so we are long at this point with stops here if you are using a counter trend entry and exit strategy. This is the PALS indicator, the parabolic accelerating long stop with parameters 10, 20, and 1. So 10 is the 10 bar high for the start of measurement, 20 is the starting point for the accelerating stop, these brown dots, 1 is the nominal speed. So we avoided getting stopped out in this area. Now market's making new highs, and we'll assume the trend is up until the S&P comes down and falls below the trailing stop. This is a very important chart for understanding the action in the bond markets. This is BLV or the Vanguard Long-Term Bond ETF daily data. This is the arch indicator, the automatic regression channel indicator. We are plotting it over 113 days going all the way to this high. We have 0 days delay, meaning we are plotting all the way to the last day. The default values are plus, which are these width of the inner bands, and 2.5, which is 2 times the volatility over this period, which are the outer bands. And observe that we meet resistance in the general area of the outer band, and we have support in the general area of the lower bands. And remember, these are default values and they were just plotting them automatically. So much gnashing of teeth today with the stronger than expected unemployment data. So essentially now, if you want to see whether the market believes the Fed is going to cut, you're going to have to see the market go outside this upper band and rally in this general area. The same analysis as the previous chart, only with the short-term bond ETF, BSV, another critical ETF, and same pattern, resistance near the upper band, support near the lower band, we got near the upper band, strong reversal. So if you believe that the Fed policy is going to be loosened, you should see a rally in this index above the upper band. So you can ignore all the chatter on Wall Street and just use this indicator and the daily data for the BSV to see whether the market believes that the Fed policy is about to change. Earlier this week, Fund Strats Tom Lee was in the news because he suggested the S&P could rise 4% to 5,500. So let's do some analysis. Here we have daily data for the S&P 500. I'm just doing a Fibonacci range extension using this high and that low, and it works out to 54.93, which is pretty close to the 5,500 level that seems to be gaining currency on Wall Street for the moment. For more than a month, I've been saying that the market needs sustained improvement in inflation data, which has come grudgingly at best, and it wants unemployment data or the job creation to gradually decelerate. That did not happen today. So next week, FOMC meeting should be interesting and probably a source of volatility on Wednesday. All the tools I've used are at TrendSpider.com, and thank you very much, and I hope you like and subscribe.